Hello, this is Ahura from Oted Markets. We'll be with you with the global economic outlook in the week ahead, which is going to be the 34th week of 2024. As always, let's first check what we had last week, and then we can see what we can expect from the week ahead. Last week, we had just like economic data on one hand and geopolitical tensions on the other hand. On the geopolitical tensions and the political tensions, I have to mention that the Ukraine already is about 10 days that they could capture the city called Kursk in the Russian territory. It's not all the city, but the part of the city called Kursk. It's a very important city, like emotionally kind of for the Russia, because after the Second World War, the Russia, when they could come over the Germans, they started from the Kursk, and that's why it's very historically it's very important city for them, and most probably the Russian they will continue as the Russia as the Putin said they already left the peace negotiations until they can capture back their city. Actually, from one hand, it's not that bad for the Russia because they could emotionally get the support from the Russian citizens, because before that the Russian citizens they were not that much about the supporting the war, but now with the capturing the Russian territory they now can get more support from their citizens, and so it's somehow the Putin they got some advantage from he could take some advantage from progress that the Ukrainian they had in the Kursk area. Anyway, it was not for the Russian from the Russian side. They didn't take it that much important as the Ukrainian. They tried to show that it's a very important progress. Anyway, it's a both side review. I'm just telling the reviews, just like ideas of both sides, not judging the condition. In conflict between the Israel and the Palestinian, the Hamas. What we can say is that the peace talk ended last night with no results. Biden was trying to explain that they are so close and they are they are already close to some negotiations. But what we saw from the progress, they had no result and ended this peace talk with maybe without any agreement. In addition, I have to tell that the Russians they do not like to see any progress actually in the peace talk between the Israel and Palestinian, because if we end the war here in the Middle East, and we can see that they can get more attention on the Russian and Ukrainian war. So they don't want to get the world attention. They want to see people to watch mostly about Israel and Palestinians, so they can do whatever they want in Ukraine. So that was the geopolitical tensions that we had. Why the Israel and Palestinian peace negotiation is very important, because besides what's going on between them, the Islamic Republic in Iran, they're waiting most probably for this peace talk. If they can get some result from the peace talk, probably they cannot. They would not try, but they will not look after revenge on the Hamas leader, which killed in Iran, and mostly they will not trying to attack on Israel. But if the peace talk they go nowhere and they have no result, then we can count on the Iranian attack on Israel and probably an Islamic Republic attack in Israel, which can increase the tensions and make some changes in the global economy. So anyway, that's why it's very important. We have to watch that in the week ahead as well. What will be happening these peace talks. On the economic data, on the economic front, last week was a very good week actually. After the week before that we had some disappointing data from, especially from United States and China. Last week we had some positive data from Europe, UK, and United States. In United States, retail sales was better than expected on one hand. On the other hand, Michigan consumer sentiment was progressing, so that generally, and the labor market also, initial jobless claims fell to 10 months low, fell to last few months low. I don't remember how many months low, but 227K requests, most probably initial jobless claims that we had. Yeah, 227K requests that we had. Generally, they showed that the labor market is still fine. Retail is still good, and the people still they have money to spend, while the sentiment also is a positive. Michigan University sentiment, consumer sentiment at 72 had a progress from 68.8 that we had week before that, months before that. Generally, that was a positive data from United States, and that caused this market to count less, to give a less chance for 50 basis point rate cut in the September meeting. We know that the week before that and after the NFP data, we had more than 50% chance for rate cut in the CME group FedWatch tools. We could see more than 50% chance for the 50 basis point rate cut in September meeting. But right now, it's less than 30%. So now the market can count on higher or longer. So that's what we had previous week in just like what we had in previous week in the United States. On the other hand, on top of that, on top of that, in United Kingdom also we had some positive data. What with inflation in United Kingdom came out less than expected, and inflation increased just only 2.2% annually in July, which was less than 2.3% market estimate. In monthly case, it fell by 0.2%. Generally, data we had from United Kingdom also, it was better than estimates, was greater than expectation, and somehow supporting the idea of another rate cut in next meeting. In Eurozone, while the economic calendar was very light, we had the GDP numbers, and the GDP increased by 0.3% in the second quarter, in line with estimates. That caused to say that, okay, that generally the economy is still a little bit fine with the light economy that we had last week. Euro increased, the European stock also increased in line with other stock markets. Generally, we could say that, okay, with what we say here, what we can see in the market, that the economy is a little bit stronger than expected that we had in early 2024. In United States, I forget to say that the inflation number, which was in focus last week, increased by 0.2% as it was expected, with no surprise. On other places, also in the GDP in Japan, also we had a positive data from Japan with a 3.1% increase in the second quarter GDP increase, but at the same time, industrial production and manufacturing production fell less than expectations, and we had at the same time that we had a little bit positive data in the second quarter GDP. For the third quarter, we had some disappointment with the less than expected industrial and manufacturing production. So we can see, we have to wait and see what will be happening next month, especially that we had a financial minister, I forget the name, Japanese financial minister. He told that he will resign earlier next month, as he couldn't control the cost of living, and with the higher cost of living in Japan, while they couldn't increase wages, so he felt that he's not successful and cannot do the job, so he's going to resign next month. This generally we had but in China we had some negative data, disappointing data. Fixed asset investment missed estimates. Unemployment rate increased from 5% to 5.2%, while industrial production also increased less than estimates and less than previous month. Generally, the data from China was disappointing at the same time, but at the same time, disappointing on one hand, but on the other hand, retail sales increased more than 2.7% more than estimate, and the central bank in China injected $8.1 billion to the cash market, which could support generally the stock markets in China and Asian markets. For the week ahead will be very important actually in most economies. First of all, on Monday we will start the day with leading index. This leading index is very important, but while even thought that it's in the last 28 months that it was in a negative territory, and we're expecting for some crisis, economy in the United States still increasing, and somehow LEI lost its correlation with what we could see. The number lost its correlation with what we could see in the real economy, but still LEI is very important. We have to watch the market, expecting to see another negative data in LEI between 0.3% fall to 0.6% fall. So different estimates about the LEI. On Tuesday we will have let's finish the United States and then we can go to other markets. In United States we will have existing and new home sales are also on Thursday and Friday. For both, we are expecting to see a little bit increase, but a little bit increase, and most probably this increase will be so light. But market will be hopeful that from after September that the central bank will most probably will cut the rates. Then we can have the lower mortgage rates, lower mortgage rate, less than 6% most probably, and that can support the housing market from most probably from September and November, September and October. But right now for July and September, we are not expecting to see some I can say meaningful progress in a housing market. But still, United States and generally in global economies, Tuesday and Wednesday will be very important this week, as we will have the Jackson Hole meeting. We know the Jackson Hole is very important. It has almost the same level of importance that the central bank meeting has in the United States. Generally, we are expecting a little bit positive data from Eurozone, and this positive data most probably can support the euro, can support the USD, and we can say that the US dollar can get advantage of that, but will not be that much positive for US stock markets. On the other places, in China on Tuesday, we will have the central bank meeting where we are expecting to see the People's Bank of China to hold the rates at 3.85 and 3.85% that we have for the loan prime and for the Chinese loan prime rate for the 5 years loans and the 1 year loan, which is the basic, we can say that the target rate for the central bank. That's what we are expecting to see on Tuesday, which means that the central bank, after injecting $81 billion last week and cutting the rates 2 weeks ago, most probably we can see the holding the current policies for now to see the results, and then they can go on and make next decisions. For now, these data show that the last month we had a little bit progress in United States, but still the Chinese consumers, they are not that much encouraged to spend more money, so they need more evidence and they need more results. They need more signs to start spending the money. For now, that's the condition. In Eurozone, we'll have the CPI numbers on Tuesday, which is very, very important. Actually, we're expecting to see no progress on the monthly scale. CPI will be flat. In the annual scale, most probably it will be increased from 2.5% to 2.6%, and most probably, and we are not expecting to see any surprise. So core CPI, which is excluding the food and energy prices, will stay steady at 2.9%. But what's important is that Thursday we will have a PMI numbers, not from the United States, not from the Europe, and most developed economies from across the world, in Japan and other economies. PMIs in Eurozone, we're expecting to see a little bit progress in manufacturing PMIs, but these manufacturing PMIs still will hold under 50 progress area, under 50 level, which means that still the economic condition in Eurozone still is not what we have to see and what we are expecting to see in general, like in a bigger picture. But the service sector will be most probably more than 50 level, above, higher than the 50 level, but still less than previous month. Generally, the data we're expecting from the Eurozone is not that important, is not that positive, which means that we can see a little bit pressure on the euro against its crosses in the week ahead. Then we will have that we have in the Eurozone. In Asia, we have the Chinese. I told you about the Chinese. We have the Japanese CPI as well, Japanese PMI as well. And that's the most important data that we have. Let's go to see the chart and see what we have in the chart and what we can expect from the chart. Here we go. This is the BTC chart. Let's start with US dollar index chart. This US dollar index chart, as you can see, the dollar index fell lower on Friday, close to 102.36. We are expecting, with the data we are expecting to see in the week ahead, which means a little bit more positive and progress data, which we had a Friday as well, and we are expecting to see the next week, means that the central bank will not going for the rate 50 basis rate cut in September and 25 basis rate cut in September can be the positive and the good news for the US dollar index for now. And most probably we can see the US dollar index around between 102 and 103 mark, not lower than. But on the stock markets, while we had too many progress in the last 2 weeks, and the stock market increased in the last 2 weeks, for the week ahead, if the price fell under 5,500 area, we can see more pressure on the stock market. Right now, we don't have that much positive and progress. Positive and advantage, the positive data and positive ideas and supporting numbers that they can support the Eurozone economy. They can support the US dollar stock market and see this 500 around more than this. But most probably, if we fall under 5,500, then doors will be open for 5,400 and 5,250. So for the next week, we're expecting a little bit pressure on this US stock market. Same thing we can expect for the gold market. Let me open the gold chart. This is the gold chart. Gold after reaching the higher high, we are expecting to see a little bit pressure, as we're expecting to see the US dollar to get stronger next week. On the other hand, in the bond yields also will get stronger next week. On the other hand, we can, in both of them, they can pressure on the gold price. So gold price reaching the new higher high, while the technical still creating a clear uptrend. We can see the correction around 2,480, and if it can continue further, we can see this correction about 2,450 as well. So these levels can be the possible corrections. On top of that, on other side, let's see on top of this, on oil market, as I told, in oil market, after recovering from $72, this recovery could not be the trend changing at the 68.8% of its Fibonacci level. As you can see in the chart here, the oil price started to falling down from here, from this level. Technically, we are again in a downtrend, but fundamentally, we can say that there is no enough reason to go lower, because the tensions are still high, both in Russia, in Palestine, in Israel. The tensions is low, and it can increase the chance of higher prices. But at the same time, we have a negative data from other countries, from different economies, that they means how less demand can be seen in upcoming months. Generally, the numbers and the data that we have from the market, you're somehow covering each other, so we don't have enough reason to see higher numbers and not enough reason to see more pressure on the oil prices. So most probably we can see again the oil price around $76, a little bit $1 or $2 higher or lower, but around $76 and $77 as the expected price for the oil for the week ahead, unless if we see any geopolitical tensions or something that is out of our expectations and out of the estimates. On the Bitcoin chart, we can see the Bitcoin at corrections. Right now, there is all the signs of the technical signs are about the correction on the Bitcoin. The next target will be around 57, and then 52 and 48,000. Most probably, we have to see the 48K before 48,300, something like that, before the next trend. But generally, from the data we have from the chart, and on the chart, we can see that the Bitcoin is moving in its clear downtrend. We talked about the stock market, dollar, oil, and everything is covered. If you had any other question, please don't forget to write down in the comment section. I'll try to get back to you as soon as possible. Have a good time. Bye.